Our first story today is going to be about BSV's halving event that just took place today. So we've been following the ongoing developments inside the world of mining, where the different Bitcoin blockchains are going through the process of experiencing their halving event here for 2020. And the latest, of course, is BSV, which just hours after Bitcoin Cash's halving event we covered, completed its own 50% reduction to their block reward, the first in its history, as well as BCH's. Now, BSV, of course, is a fork of the Bitcoin Cash protocol, which emerged over a split in the BCH community regarding additions to the blockchain, regarding additions to the operating protocol. BCH, of course, was a fork of Bitcoin when the community split away over a disagreement on scaling. This was the infamous big block, small block debate in the UASF, the user-activated soft fork, which was pushed through, which preserved the network, which didn't require us to do a hard fork. And then the BCH community, the big block community, decided to fork away anyways. And now here we are, nigh on 2 years later. Now, point is, these three Bitcoin blockchains are all undergoing their block number 630,000 halving event around the same time. The BSV chain is just the latest, and just like what we saw yesterday with BCH network metrics, as soon as the halving block was mined, a portion of the network's miners jumped over to begin mining the BTC chain instead of continuing to mine the BSV chain at reduced output. Now, Bitcoin is not due for its block reward halving for another month, so this does leave the BSV network less attractive to mine on for at least another 30 days. And as a result, the hash rate on the BSV network has collapsed, much like what we saw with BCH on Wednesday. Now, BSV proponents say that this is a temporary market condition, and how miners distribute their ASIC resources across the three Bitcoin chains will shift again once Bitcoin has its own difficulty adjustment or May's halving event. What's interesting to consider is this could lead to a potential hash war between the BCH and BSV chains, like what we saw go down between the two chains in late 2018. The concentration of ASIC power on those two networks during that hash rate war did have spillover effects onto Bitcoin's network at that time. So with the BCH and BSV halvings out of the way, our attention is now going over to Bitcoin over the next month, which has a difficulty adjustment coming up, as well as its halving set for mid-May. In other words, we can expect miners to be migrating back and forth between the two chains over the coming weeks, and we'll have a clearer picture of hash rate distribution across the three chains in just a few weeks' time. In terms of the price side of things, in the wake of this week's halvings, BSV and BCH have both seen a pretty significant drop in price, which coincided with a general market pullback for all cryptos today on Friday, again starting early this morning and moving on today. With Bitcoin dropping below 7,000, BCH gave back the gains that it had made on the previous day and closed today around $232, while BSV had a similar pullback, closing around $185 today's daily. Now, in this previous Cointelegraph article, they go into the details behind the block reward halving and long-term profitability, including transaction fees, and this does touch on the BSV value proposition. Jimmy Wen, who is with the blockchain research firm Enchain, which itself is behind the BSV blockchain, declared that the halving will be a pivotal moment for Bitcoin SV. Wen says that in the short term, the 2020 halving will have an impact on miner profitability, but the long-term trend, however, is one where transaction fees become increasingly more relevant for a miner's profitability, as miners earn increasingly less from the actual block rewards following each four-year halving event. Wen argues that they will need to offset that with income from more transaction fees. Seems logical. As BSV developer Daniel Connolly explained it in comments made to Cointelegraph, that the cost of mining a block has not changed. The subsidy paid out in mining rewards, though, has halved. To make up the slack, a miner can choose to increase their transaction fees, or they can increase the number of transactions contained in each block in order to collect more fees per block. This is, of course, where the BSV value proposition lays. By having nearly unlimited block size, miners of the future will fall back on transaction fees rather than actual block rewards. Whereas Alex Spears, the Bitcoin Association, and also a BSV proponent, says the Bitcoin network was really designed to incentivize network sustainability through transaction fees and not mining block rewards. According to Spears, the problem with BTC and BCH, their extremely limited block sizes wouldn't allow and won't allow for profitability through transaction fees. In other words, BSV in the future hopes to attract miners through transaction fees as other chains diminish in their block rewards paid out to their miners. This is one of the fundamental propositions behind BSV, and I suggest you guys give this Cointelegraph article a read, because I think that it does present what BSV's, what their narrative is, what they're setting out to build, and you guys can come to your own conclusions. Now, in the meantime, we can look at data from CoinDance and see that the BTC chain now controls 99% of the hash rate distribution among all three blockchains. So if we go solely by tonight's snapshot of the hash rate, well, we can see which blockchain is incentivizing the most miners right now. The halving on the BCH and BSV chains has led to a noticeable drop in the hash rate controlled by the two networks, but we'll see where we stand in about a month's time and keep our eyes on these trends in the mining industry.